So why have we seen the credit market in China really stalled, and how are we seeing that being reflected in the latest Bloomberg tracker data?
Yeah, from November last year, really we've seen 3 months of a spectacular rally, and most of that was driven by the policy support coming from the country's government regulators for the property sector, which is really an important part for the country's offshore dollar bond market. And I think 3 months later, we're just starting to see some of those effects wear off a little bit, not least because some of those policies will need some time to take into effect. And also among a few surviving developers, some of them are really still struggling to keep up with their offshore payment schedule. So I think the market was reminded of all of that liquidity struggle yet again. So all of that has led to a drop of 1.6% in Chinese dollar bond market in February. And also there's that macro backdrop where, all of this was happening before the SVB saga, and the market was pricing in a more hawkish Fed. So really there was a global pullback as well in other credit markets, as well as some other assets. And that reflected in our tracker data is suggesting that the stress level is rising again for the offshore credit market. So the stress level has risen from level 2, which is the lowest since we started compiling these data, to level 4 in last month.
Alice, how much progress are we seeing in developers restructuring, and how is this helping or perhaps not doing much to boost sentiment at this point?
Yeah, you're absolutely right. There has been a lot of progress that we're seeing. So a few big developers are finally showing some of those progress months or even more than a year after their initial default. So that includes Fantasia. Some remember the developer's default in September 2021 really shocked the market and was followed by a record wave of defaults. So that developer has signed restructuring support agreements with some of its major bondholders, and other bigger names like Sunac is also preparing similar agreements to be signed with its major bondholders, and names like Logan started circulating a debt framework to some holders, and CFI, which is a more recent defaulter, has also announced some preliminary framework. But all of that so far has not been sufficient to bring back the market rally that we've seen in previous months. I think due to a few reasons. Number one is this has really been limited to a few developers only still, and the market simply needs to see more others joining in. And another is it's still a long time maybe until investors can get their money back, from seeing a proposal to negotiation to signing it and then getting the court approved. That's still going to take a little while, not to mention for some of the proposals that we've seen so far, the debt maturity profile is being stretched out for as long as 7 years, and in Evergrande's case, that's 12 years. So really it's a long time until people can get their money back. And also they just need to see more details as well from fuller proposals. They need to see cash flow projections and things like that to really be able to determine their recovery value.